everybody. Welcome to this CEO talk number 2, trying, as started yesterday, to shape the future of Africa. I hope that you've enjoyed the yesterday night gala dinner. I know that some of you also enjoyed the after party, but hope that you have the time to rest a little bit and you are fresh for today. We'll have a very interesting panel, trying to see, as we said yesterday, how is this Africa being shaped for the future? Yes, many things have been done, even though we need to really speed, we need really to scale, and we need really to impact. And that's what we will discuss during this panel, looking at the digital agenda, how Africa will be facing these digital challenges, AI, and everything's happening across the world. How will we take advantage of it? But also the integration agenda, because it's something which is key. Africa cannot develop without integration. But we'll see that there are some challenges. People in the ground are doing tremendous things, but still much is to do. And then we'll talk also about one of the key things for the development of Africa, which is financing. We know that there are a lot of uncertainties going around, that there are some challenges to bring in the continent's finance from abroad, so we need to find African solutions for this financing. So to discuss about it, I have really great African champions. Great because you will see that among them we have some of yesterday awards winners. So for this panel, I'll call first Mr. Arnaud Lages, CEO of IBL Group. Congratulations for winning yesterday the Family Business Awards. Welcome. Just have a seat. I'll call then Brenda Mbati, CEO of Trific. Welcome, Brenda. Yeah, in the middle. And then I'll call Mr. Soumaila Zubairi, President and CEO of Africa Finance Corporation, winner of the African Champion Awards. Congratulations again. Mr. Philippe Laborne, which is President of Africa Global Logistics. And Mr. Jules Ngakam, which is Group CEO of Africa Guarantee Fund. Welcome, Jules. So yes, the challenges are great. And as we said, all of these persons and companies are working on the ground to make things happen. I'll begin to start with Soumaila. Soumaila, Africa Finance Corporation is not only financing, but also thinking and doing research to reshape the future of Africa. I think that you are releasing a very important report about infrastructure, talking about the state of African infrastructure. Can you talk us a little bit about the insight of this report?
Thank you. Good morning, and thanks to the Africa CEO Forum for this opportunity, and to our host, the government of Rwanda, for giving us an opportunity to have a dialogue on the future of Africa. I think the stage was set yesterday with the questions around why, Africa isn't yet, but we're still talking about can. What we do at the Africa Finance Corporation is really to ask the questions on what would be required to move us forward. So the report that we're launching today was actually spurred by several questions that we asked based on our experience. So I'll tell you a little story. A couple of years back, we invested in a special economic zone in partnership with the government of Gabon and Olam to build 3 ports, invest in upgrading the rail network, invest in an industrial park, invest in transmission lines, to feed or power the economic zone. And it seemed to work very well. It worked because the country has moved from exporting raw logs of wood to value-added veneer, plywood, sawwood, and even furniture. There's a furniture showroom now in Florida that is selling furniture made from Gabon. And on the back of that, we've extended this to Benin Republic, where we're focused on the cashew, cotton, soya, and sesame value chains. Again, there we're able to export T-shirts to the US, towels as well, provide uniforms for the military. And then, of course, we are doing the same thing in Chad, focused on livestock. There, again, we're able to provide an experiment or prove an experiment on Continental Free Trade, because our livestock is moving from Chad into Cameroon, into Gabon, and even down to Angola. Now, what we have discovered is that it's very challenging to get this done. You know, as I describe it, it's the ports have been built, but the rail network is not as efficient. So we have a port, the mineral port in Owendo, that is really constrained by the rail network. So anytime we have a challenge on the rail network, you know, we see that it affects the port volume and affects several other things. You know, so that is an example of why there was a need for a deep dive on the connectivity of the ports to the market and to the production centers. Now, we've also always argued and tried to make a case that Africa has a significant moment for change, that the intersection of the energy transition, climate, global aspirations for net zero present us with an opportunity to really advance the structural transformation of our economies. We've always argued that exporting raw materials is not the way for Africa to progress, and that we must find ways to embark on structural transformation that will spur sustainable growth, create quality jobs for our people, generally empower vast Africans across the continent. Now, this structural transformation cannot happen by itself. It requires significant investment in energy systems. And the report highlights the gaps and the need for us to take a closer look at the energy systems in a way that they can support structural transformation. And I'll give you an example. So, Guinea is one of the largest producers of bauxite, actually has the largest bauxite reserves in the world, just like Australia, which is also a large bauxite producer and has significant reserves as well. But what is Australia getting from its bauxite versus what is Guinea getting from its bauxite? Guinea is getting literally nothing from its bauxite because sometimes the freight of the bauxite is higher than the bauxite itself. I know this because we're invested in 2 bauxite mines in Guinea. Australia is able to move from bauxite to alumina in the main and to aluminium. So they are able to capture that value. What is required for us to be able to do the same in Guinea? This again is part of what the report is looking at. Now, going forward, what we would like to do is to say, okay, we have all these minerals and metals. They have different levels of carbon intensity, different levels of energy requirements for beneficiation. What should be the priority for Africa? So Africa has some of the highest grade iron ore in the world, sometimes as high as 70%, but mainly above 50%. So what that means is that you don't need as much energy to transform that iron ore. So maybe that is an area that we should be looking at. We also have significant copper reserves, significant cobalt reserves that are also going to be significantly required going forward. In fact, I was talking to one of the big miners yesterday, and he was saying to me that the copper reserves are going to be the most important mineral going forward. And processing them is going to be one of the biggest challenge. And of course, you've all read about, you know, the Anglo-American acquisition by BHP and all the challenges around that. and what people don't understand, it's all driven by acquisition of copper reserves. So what are we going to do to process the copper that we have in Africa to get more value for that? Again, we have an example of what we're doing. We're investing in a copper mine and copper production in DRC. And part of what is happening there is that we're also investing in a hydro dam that would have renewable energy process that copper. So we'll have green copper, and that makes it one of the best opportunities in Africa. Again, these are instances of examples that need to be done at scale. And what the report is trying to highlight is the need for us to build energy systems, integrated energy systems, to be able to do this at scale. Finally, we also have made a lot of investments in digital infrastructure, subsea cables all across Africa. We have seen the recent examples of the vulnerability of that. We've also seen and have experienced the fact that we don't have as much internet access on the continent. We actually have about 40% access, while the world or global average is 60%. And of course, it costs so much more in Africa. So it's what are the investments that we need to do on the middle mile? Because the last mile is sometimes covered in urban centers, but most Africans don't live in urban centers. We're not connecting the universities, we're not connecting the secondary schools, the technology centers. So we need to be focused on really how to build infrastructure that empower our people. We need to focus on building the infrastructure that will ensure that we can finally escape the vicious cycle of the boom-bust economies that we have on the continent.
Thank you, Sumaila. I think things are very interesting. I know that you can take the whole hour of the panel because it's a very interesting report and the topics are very key, but we'll have the occasion to come back on it. But I think that you have the flavor of the report. I know that the AFC team have put a QR code when you will go at the end of the panel, you can scan it and have the complete report as a privileged person before it's being released. So don't hesitate to take it. So we have understood that the middle mile is very important. It's not, infrastructure is not only about legacy, but it's also about connectivity and creating the area to really have growth and impact by connecting all this. And you've in your last words, you have talked about digital. We know that we had real issues these days in East and in West Africa with all these submarine cable that have been cut and so on. So digital is also very important, and it gives me occasion to turn to first Arnaud and then Mathilde to talk about the digital challenges in Africa. So if you can just give us some thoughts about this. How can we tackle the digital agenda?
Thank you, and good morning to all. So what I can say is that before talking about this, we need to really map what is the needs of Africa for digital transformation. And all this can probably go around a few topics, which is the need to assess the talent we have in Africa. We need to also assess what is the data available to make the artificial intelligence work. We need to assess the market and how we map this market to be able to develop this artificial intelligence. And we also need to make sure that we've got infrastructure and power that will come in parallel to this development, and also make sure that the framework around the development of the digital transformation is all in place. What we can also see is that there's a lack of digital dexterity in Africa, and also that this digital equity of Africa is probably the lowest we can see compared to all the other countries. So we need to build up this digital dexterity. We need to build up the digital culture around IT, and also the digital skills by promoting talent and talent around universities, schools, etc., both at private and public sector. We can unfortunately see that more than 800 million Africans doesn't have access to IT in Africa. And this is a real problem. So we need to boost up quickly the investment in both energy and IT infrastructure so that both can help this digital transformation goes on. We also need the big tech companies to address I would say, the pricing strategy for Africa differently than the one they are addressing for, let's say, developed countries like Europe or the US. And this is a real call to the big boys of a tech to really have this approach towards Africa that will help us really move the needle differently. And also make sure that all the data we are collecting to generate the artificial intelligence is also a data coming from Africa and not a data coming from the rest of the world. Obviously, it's not about reinventing the wheel, but it's really about making sure that we tackle the precise, I would say, environment of Africa, which is probably not the same as the rest of the world. We also see that we need a robust regulation to make sure that all this happens smoothly, but we shouldn't go into moving into over-regulation, and let's be pragmatic. I think it's really something I'm calling for. It's a pragmatism to be able to make it happen. So this is a bit what I see as things that need to be done quite quickly to make sure that this digital transformation and this journey into the artificial intelligence is really moving forward quickly.
Great. So good insight how we need to educate, train, speed, scale to go forward. Brenda, what are your thoughts on this point?
Thank you, and good morning, and once again, yes, thanks to the government of Rwanda and indeed to the CEO Forum for hosting us. I'm going to talk with regards to being in a special economic zone, and I'm very happy that AFC has invested in the ARISE projects as well across Africa, because I think that these are truly catalysts that can help to transform digital infrastructure and then our digital agenda across the continent. With special economic zones, there is a need for businesses that come to be incorporated within them for high-speed connectivity. And indeed, because we are, I'd say, maybe the new kids on the block when it comes to infrastructure, this is the time that perhaps technology parks and different types of innovation can come into our zones, and indeed this is what's happening. We're also a very fertile ground for tech startups, innovation, etc. Actually, I'd say we're like a magnet. We're attracting all the right things into our zones. In case you don't know, that a special economic zone is a zone that's incorporated, which has very strategic incentives. A lot of them, yes, are mainly tax incentive, that encourage different companies to be domiciled and to benefit from them. One of the key things that we look at, and I think we saw it last night when we looked at the video from ARISE, is indeed how we can create jobs. And when we look at the digital agenda, I think one of the key things that we are looking at in Africa is the creation of jobs for our great African talent. And I think if we look at how we upscale our digital skills, what is going to be relevant, and I think we heard that yesterday in various forums, what is going to be the education for the future. But if we equip them to harness the opportunities that are going to be out there, I think this can be very key. So as SEZs, I think we can be a catalyst, I think we can be a partner, and I think that if government looks at special economic zones, there's a lot that can be done within these zones, a bit like a sandbox, which are in a controlled environment, and we can see what works, what doesn't work, and indeed propel the continent into the future. So I want to advocate for special economic zones being a true catalyst and the way forward in the future.
Fantastic. Yeah, so to stick in the economic zones, and after we'll go to logistics, yes, you are true catalyst of digital transformation, but you are also true catalyst of regional integration and African integration. And we know that it's something which is key in the continent. We cannot move forward if we don't work to have this single market, this sub-regional and regional integration. What are your thoughts on that?
And once again, I think if we look at regional integration and we look at the special economic zone policies, the customs procedures, I think that actually special economic zone policies and customs procedures are a low-hanging fruit for us to prioritize as we look towards integration. And I think that the more we prioritize and look at the commonalities and harmonize, I think then you will actually propel the growth of special economic zones. Work is being done on this. I'd like to just talk about the East African community on this. There are now finally, for the first time, discussions on special economic zone procedures and processes. And this has just happened this year. And I think that this can be the bedrock as we go forward. But truly with AfCFTA, we don't need to wait for all the regional bodies to come together. Perhaps that could be a special category that's looked at, again in a sandbox, because I think we saw even last night across West Africa, and indeed I'd like to say East Africa, we're ready for this integration, we're ready to be used as an example, and we're truly ready to make it work.
Thank you very much. So East Africa is ready. Is the rest of the continent ready? I know that, Philippe, you are working across all the continent. Are we ready today for this integration? How can we move forward the Africa Continental Free Trade Area?
First of all, I'd like to pay tribute to the promoter of free zone, because there will be the driving force of the FTA. I mean, for sure, FTA is launched, integration is launched. But if we want to feed that market, we need area to relocate the supply chain, which is, we heard our leaders yesterday, and they were clear. They cannot accept anymore to export raw material. So then, what has been done? I mean, sure, a lot has been done for integration, ports, airports, roads, but as it was rightly mentioned by my neighbor, now there is also a gap to fill. I would say I'm a fan of railroad for many reasons, because it's a way to unlock a landlocked country, but it's also a way to decarbon transportation. So we'll discuss that later, but we need to find a way how to fund this infrastructure, which are key for the development of the FTA. Then we spoke also about digitalization and investment. It was mentioned by Ralph yesterday that we have to scale up. You know, it's a momentum where we cannot say only we do 5–10% per year. I mean, we have to scale up the investment, because if you want the free zone to be efficient, if we want the FTA to be efficient, if we want to be efficient, we have to move data as fast as we move goods, and maybe faster. And our customer, your customer on the free zone, they will have their IT based on SAS, so they need cloud. So, I mean, it's an ongoing process. We have done a lot on our side, but really, it's a very, it's fascinating to see promoters like you making it happen. And there is a figure that was announced yesterday by Nicola. The trade in Asia, 50 million Jews. Europe, 5 million, Africa, 500,000. So thanks to you, we will, I'm sure, we could reach in the 10 years to come the figure from Europe and shift the trade from Asia to Africa, into Africa. This is why we are preparing ourselves and investing. Believe me, we will be ready.
Great. If people who are working underground are saying that we will be there, so we are quite confident on it. But all of you have tackled the issue of funding, financing. We know that today we are noticing some international finance organization getting out of the continent, and I know that Samaila regularly says that we need to find solution in Africa, and some of the solution are the Africa Guarantee Fund because it's African-based and for Africans. So can you talk us a little bit about your thought on how will we find the solution on financing and how in the ground you are working on bringing solutions?
Yes, thank you. Yes, so at ADF we are trying to bring solution to be able to mobilize more financing, not just from outside, but also within the continent, because one of the challenges that we're having is that we feel that the money is not flowing as it's supposed to be, what we call the financing gap. And when we look at the financing of the private sector, where we need to go, I think, is mainly on the SME space because they represent 98%, of the private sector. But the financing gap there kind of remain quite big. So what we've tried to do was to understand the reason why we have this huge financing gap, mainly in the SME sector. And then we've discussed with some of the commercial banks, because the commercial bank in Africa, they still represent more than 95% of the funding sources of the SME. We are trying to develop other kind of alternative sources of funding through fintech, through microfinance, through any other sort of lenders, but 95% still coming from the commercial bank. And based on the conversation that we had, there are a number of gaps that they are trying to address. The first one is the collateral gap. It's mainly the fact that the SME today are not able to provide the bank with the type of collateral that they require, and this is where the digitization can also help, mainly when it comes to the movable type of asset. How do you take into account the value of those assets? We have the information gap, which is really a big challenge in Africa. Most of the SMEs, when it comes to the bookkeeping, it's not something that they will do properly. Sometimes they even have several accounts, one for the taxman, one for the family, one for the auditor. Yeah, so it's also something that we need to deal with. Information is really a challenge because those investors, at the end of the day, they need to assess what type of risk they are taking. Another challenge that we've seen in the market is the duration gap. It's mainly the mismatch between the capital that is flowing and the needs of the SME. Most of the investors, they are willing to do short-term investment. When the SME, they need more of a long-term, long-term resources to be able to grow. Working capital is not enough, but they need more of long-term funding. The skill gap is also a major challenge to make sure that when those SMEs, they have access to the fund, they are able to manage that in a kind of normal way. Yeah. And then another gap that we've also seen, mainly when it comes to the small ticket size, is the cost gap. Most of the investors, they will rather spend time to deal on big ticket size because they will tell us that it takes the same time to analyze a transaction of $10,000 and a transaction of $1 million. They spend almost the same time. So they will rather go to the big ticket size, and because of that, all the company that are the majority, in fact, in the market, but need those small ticket size are kind of left out. And then the product gap, the product that some of those banks sometimes offer is not aligned really to the need of the SME, mainly to the business cycle. Agriculture is one of the big challenges today. When you look at the repayment schedule of all those loans, is like the classical way where they pay a fixed amount like every month, a monthly installment. But in some sectors, like in agriculture, you have a specific business cycle. So what we are trying also to encourage the bank is how can they align the repayment schedule of the loan facility to the business cycle of the business. And then lastly, is just the perception. And this is where also we play a big role. The perception gap is that gap that we have between the real risk and the perceived risk. And that gap is significant in Africa, mainly because of lack of data. Investors always believe that the risk is way higher compared to where it is in reality. So what we're also trying to do is to come up with some instruments, some solution to reduce the perception gap. Thank you.
Thank you very much. It seems that there are a lot of mismatch on the flow, mismatch on the adapted finance, mismatch on the perception. And once again, we are talking about the middle mile where there is a lot of things to do, but as you say, you're working on it, some continental organizations are working on it, so good solutions, I think, for the future. Samaila, I know that you talk a lot about financing in Africa because you are in it. Also, you address sometimes the debt crisis. So what are your thoughts on how we can move this financing agenda forward in this context of debt crisis?
Thank you for that. I think what is important for us is to understand the scale of financing that we need for our development, and it is huge. And for us to understand that we need to think differently about how we're going to finance our development. And it starts by how can we have more savings on the continent. So if we look at what we get, from what we have versus what is possible for us to get, then we see the urgency for us to structurally transform our economies. We recently had the president of Uganda, talk about the coffee value chain and how much Uganda gets along with other African countries within that coffee value chain. We are in the cotton business, and we know what Africa gets within the cotton value chain. So for example, we know that if you move from just exporting 500,000 tons of cotton to 500,000 tons of garments, it's almost like a 19-fold increase in value. We also know that if we move from exporting, minerals and metals for the battery minerals value chain, it's about $11 billion. It's a $7 trillion market, by the way. But the mining output is just $11 billion. If we go to battery precursors, which is like an intermediate stage, it's $240 billion. The cell, it's $1 trillion. So it is how much we can make from this additional processing. That is the beginning of how the capital is formed and how we can have more savings on a long-term basis. But on a tactical basis now, we have savings in our pension funds. We have savings among our insurance companies. So we need to have a change in asset allocation, whereby we're looking at growth of the economies and not just, there are pension savings, so definitely we have to focus on safety. We have to focus, more on safety than on return, but then we need to create that window for growth. So if you look at the advanced economies, they have an allocation of about 5%, some 2%, whereby they do venture. And it's that venture that has led to the birth of the Microsofts, the Apple, the Googles, the recent young one for the young people, Snapchat. Yeah, because I know
you're still young, Samaila.
So all of these things have been funded by long-term savings, and it's important that as policy, we focus on safety, but we create a window for us to invest in venture that we need to encourage growth within the economy. So we have focused on how to mobilize domestic savings, and it's a model that we did with the Sovereign Investment Authority in Nigeria. What we're trying to do there is to provide guarantees for pension funds and insurance companies to invest in agriculture. And we think that this is a model that can be replicated all across Africa. So things like that need to be done at scale. We also need to look at what is the asset allocation for the pension funds? So I think someone said to me recently that there's $1 trillion of pension savings in Africa. Somebody else said it was $2 trillion. Now, if you find out the real data and see how much of that can be invested on the continent, what we advise, I remember several years ago, I had an opportunity to talk with the managers of the Nigerian pension industry, and I advocated for them that, look, you need to create an allocation for infrastructure funds. Okay. You need to create an allocation for private equity. You need to create an allocation for infrastructure bonds. Yeah. Why do you want to do that? Because you don't want your pensioners to retire and use their gratuity and savings to buy diesel and to buy generators. You need to give them a better quality of life at the end. So it's better for us to find a way to look at the long-term view, and let's make policies that allow better quality of life. We need to really focus on the people. How can Africans be better empowered? And that should be what drives our strategy. Finally, I've always advocated that we have to change from months of import cover to investments in sustainable growth, investments in energy transition. A government should not be focused on building reserves to pay for imports. A government should have a deliberate policy of building reserves for investments that will lead to growth. If you look at economies like China, they have the largest savings today. Why? Because they build a productive capacity that allow them to invest. We can't just be looking at paying for imports. We need to build the capacity to generate the savings that allow us to save.
Thank you very much, Samuela, for this great advocacy. Last question before I give the floor to the room to allow them to give some question. Arnaud, you are working across the continent, also out of the continent. You have heard this point on financing, also on regional integration. How you feel in the ground, this regional integration, and also the financing? We've talked about financing gap, the middle miles. So as a family business in the continent, which is one of the, I would say, most of our private sector in the continent is more about family business. So how do you feel in the ground this point about integration and financing?
That's a good question. Actually, the chance I have being home based in Mauritius is that the development of a group has been made in the nearby region, Eastern African region. So we are a bit...
Which is very ahead in integration, as said.
Exactly. So we are surfing on this COMESA and the SADC, I would say, convention, which give us a lot of headroom to move goods, move people, move equity all over the place. So for us, it's not really a problem, despite the fact that now Kenya has put a visa. So for us as Mauritian, we need to dish out a $30 visa each time I go in and out, which is not the case in Rwanda, which is great, by the way. But I would like to advocate for the free trade agreement, because I really think it's something which need to be implemented as soon as possible for Africa. We can see that putting this free trade agreement in place would probably generate more than $60 billion of additional trade on a yearly basis. So it's really about big numbers. And to do so, we need, to my view, to set up 4 steps. First is to remove the tariff barriers as soon as possible, which obviously will enhance the business. Secondly is to harmonize the free trade movement for goods, services, and people, and open up to the single market like we could see in Europe or in Asia, which really is doing great. And as I was talking about COMESA, which works for us. Third step is have a strong regulation to help maneuver and frame, I would say, the environment in which the countries and the people and the corporates are evolving. And fourth is obviously the need to improve all the logistics, the transport and the infrastructure all around the place. And this will ask for a lot of money, obviously. which is something which is a bit a scarce resource in Africa. And probably having the, I would say, the local resources into the system is a good thing, but also probably a call for the big international financing houses to be probably more aggressive in terms of financing. When I say aggressive, it's more leaning towards lending in local currencies, probably asking for less guarantees, and really put programs that works for Africa and not what works for Washington or, for that matter, Paris. So I really think there's a play. I think the public sector should lead the way. I think the private sector is also a key element for moving the needles. And as my colleague was saying, the implementation of special economic zones is really a start. And my group is really looking forward to move some of our activities in those zones in East Africa, because we believe it's really going to boost trade and obviously bottom line.
Great. I think Brenda is happy. She has the person who will finance her next economic zone and the client to be in the economic zone. So we'll just take a little bit time to have some questions from the public and come back to sum up. So is there mics circulating for those who has questions, remarks? One question in the front. Do we have a mic? Or let me give you a mic.
Okay, my name is Mathieu Seguin. I've been operating in Africa, Sub-Sahara for the last 20 years. And it's a question to all of you. So to shape a better future for Africa, and if I give you a magic wand, and you can change one thing, but one thing only, what would you change and how would you change it?
You took my last question, but great. Yeah, that was the last question. Can someone help with the mic? Here. This one is not working. There is one question here and another.
Good morning, everyone. I'm Bumi Bajomo, EcoBank Transnational. I wanted to ask my questions around the special economic zone. You know, we've had so many governments and in conjunction with like the Arise Group setting up economic zone. But what we found is that sometimes the economic zone actually turned out a bit more expensive to operate from compared to the entities staying outside of the economic zone. Number one, I wanted to know what could be done to make it more habitable for corporations so that, you know, we don't have so many economic zones being underpopulated. And then secondly, for the proponents of these zones, I wanted to know what they are doing in terms of enhancing the attractiveness and making sure corporations are aware of the positive around setting up in the economic zone. Thank you.
Thank you. Two more questions.
Okay, good morning. I'm Christian Fogain from Affluent First Bank. I have two questions. The first question goes to Madame Batry. It's about the economic zone. I would like to know, I'm not convinced, and if she can give me some argument, does it really work here in Africa? Has it produced any significant results, the economic zone, in our context? And the second question is Mr. Jules Ngankam. He talked about the gap, and there was one particular gap that interested me, perception gap. So I would like him to elaborate on that. How does he evaluate that? How does he see it? What are the criteria? And most importantly, how do you remedy to that gap. So those are my two questions. Thank you.
Thank you. Last one.
Good morning, everyone. I'm Pierre-Roy Contensin from Canal Box, talking about this digitalization.
Can you speak a little bit louder?
Yeah, sorry. Talking about digitalization and connecting the final users and the local loop. We are a player already in Rwanda. We own the #1 FTTH network in Kigali, and we're already connecting a lot of people. The question is for Mr. Labon. You talked about digitalization of AGL. How can we help you doing that? And how do you see the need for those services for your business?
Thank you. We'll try to answer the different question. Brenda, start, and then Philippe, Jules, and then Samael.
Thank you. So do I answer Matthias's at the end? Because
no, the first question will be the answer at the end.
Thank you.
It will be the sum up.
Thank you. So apologies, I may not have heard it very well. But let me just start with, I believe, the lady from EcoBank. With regards to special economic zones, there are criteria which you need to fulfill before you come and be domiciled in a special economic zone. One of them is the movement of foreign capital, how is your business structured, etc. We also, and at least in our zone, we do a financial benefit calculator with you to show you the benefits of whether it's worth the company's while to be domiciled in the economic zone or not. It is not for everybody, but it is truly for many. And I would say that there should be no reason for it to be more expensive to be domiciled within a special economic zone if the criteria has been met. So sometimes it's about the way the company is structured, or maybe the perception of what was going to be realized. So I think it's very important that one goes through a total value proposition of each business to see whether you will get the benefits. In terms of, I think the second question was, how do SEZs work? It was very difficult to hear you, sir. Yes.
There was a question about how to show example of economic zone that works across the continent, that are working well. So
I think Arise can give you that, but there are, for instance, in Kenya, there are very many economic zones. There are more than 40. In terms of if there's more than 40, believe you me, they are working. Many people may be domiciled within the SEZ, but they may not be highlighting the benefits that they're getting. And I'd have to say that this is now a key focus for many of our governments going forward because of the benefits, but also because they're in controlled environments, so you can actually have oversight over them to see how they benefit the country. But it truly should be a win-win situation. And I believe Arise showed us a great documentary last night in terms of the 10 economic zones across Africa that have worked for them. Maybe you could talk to us
I think I'd like to just quickly interject. So the question she raised is very important around cost competitiveness of economic zones. And the other question is also very important around the companies that operate there. I think the fundamental thing is that there are different strategies for economic zones. Some people see it as a real estate play. So they have a large bank of land and they are selling it out to people. So that's one strategy. Another strategy is to look at specific value chains. Our approach has been to look at a particular value chain. So for example, in Gabon, we looked at timber and forestry. And there, it is clear that over 30,000 jobs have been created. It is clear that the country has seen an addition of almost $1 billion in their GDP from the economic zone. It is clear that so much more value has been created. And why? Is because you've looked at the entire value chain and you've created synergies within that value chain for different operators. It's the same thing we're looking at in the cotton value chain, in the cashew value chain, the soya value chain, and the sesame value chain. So it's really around looking at the entire value chain and ensuring that the producers of the crop have a market, the people that are processing have the energy to process. So your idea about cost is very important, because what we try to do is to find the lowest cost possible for people to process. And our view is that energy systems are really the comparative advantage that Africa must possess for this transformation to happen. So it's really around value chains and cost efficiency. And you can do that by negotiating a scale for both the input in terms of gas, natural gas, if that's what's required, or hydroelectricity, if that's what's required, or solar electricity, if that's what's required. So it's really around being cost competitive.
Philippe, do you want to?
Thank you. To reply to the question and add to what has been said by Soumaïla, competitiveness of this free zone is key. And as a logistician, we should support the supply chain to be the most efficient possible. And in that regard, our job is more and more sophisticated. We will use more and more data, more and more AI. And just to give you an example, for the last 3 years, we have trained more than 1,000 people, only for IT, innovation, data management. We have 2 digital centers, one in Abidjan, one in Johannesburg. We may open one in East Africa. So to reply to your question, we need high-calibered communication. It's key. And our, as I told in my former speech, our software will be in cloud because we want to be the most efficient possible. It is a future. So all that is done now in Africa should be done at the greatest standard worldwide. The future is now.
Thank you. Jules, you had also a question.
Thank you. I do have 2 questions. I think the first one is on the question if we were to change one thing, and the second question on the perception gap.
Yes.
Yeah.
The first question on the change, it will be the magic of the end.
For the end, okay, perfect. Yeah, so on the perception gap, you know, it starts with the rating agency. When you see today the way most of countries in Africa are rated, that is really a challenge. And we do believe that it's a model that is more adapt, you know, to the Western country. Yeah, and that's why more and more we have some rating agency in the continent to find a way to better assess the risk of our continent and give like a figure that is closer to the reality. And one of the questions was, how can we address this issue of the perception gap? The first approach is through our product, the guarantee. You know, the guarantee product, in fact, is there to give more comfort to the investors as they get to know more and more the type of investment that they are making. So initially, if they're not comfortable, the fact that we're happy to de-risk their investment, with time, they see that they need less and less this type of instrument. So as ADF, we are successful when we lose our client. That is a sign of success. It means that now they don't need us anymore.
They don't need your support, okay.
And another way to reduce also this perception gap is through the narrative. I think we need also to tell our own story. You know, we need to showcase some success story. In the continent, one other aspect that is also missing is the lack of credit bureau. When you look across the entire continent, the number of countries that have a credit bureau that is well functioning, we have less than 10 countries in Africa with a well functioning credit bureau. You know, it creates also a lot of information asymmetry, you know, between the lender and the borrower. And then lastly is the lack of the secondary of the secondary market. You know, when you enter in an investment, you have to carry it till the maturity. So we need to have a secondary market that gives like a second chance to the investors. In case they don't want to carry that investment, they can always get a buyers in that type of secondary market. Thank you.
Very interesting answer. So as you have the mic, so you can answer now the first question. If you have a magic, what you change, what is, on one word, just to sum up, what must we do to make things happen?
Yeah. If I have one thing to change in Africa is the number of African currency. You know, money always move faster than people, than goods, than services. So if we create barriers on the way the money is flowing, we are also creating a big barrier on how the goods, the services, and the people are moving. So we have, for example, here in Rwanda, it's a different currency. You go to the neighboring country, another different currency. I think if we could come together, at least manage this issue of those multiple currency, that would be a good thing.
One currency. Philippe.
So my dream would be that all the projects that are ongoing should be done concurrently, not one after the other.
Speeding and doing
Speeding
things
and make it happen together. So we have to change scale.
Great.
Unfortunately, I don't have one. I have several.
I'm not surprised.
but I think that the most important thing really is for us to have a different mindset. We need to own our development. And we need to understand that we are the only ones that can develop our continent. But we cannot do it alone. We need partners. So it's how do we negotiate the partnerships that work for us? So it's really for us to take charge, take ownership of our development, understand that we can't do it by ourselves, but let's have a framework for a negotiation of the partnerships that work for us.
Thank you. Great. Brenda.
Thank you. For me, the one would be free movement of labor, followed by free movement of goods.
Great.
And for me, it will be boost education. I think if we succeed in really educating more the young generation, I think we'll succeed. And I was hearing yesterday the quality of education that they have in Morocco. We're working with African Leadership University in Mauritius. Understand they've got their headquarters here in Rwanda. So really boosting education for me is probably a big part of the success of Africa for tomorrow.
Clearly, I think you have heard from real actors of the ground doing things and also advocating on the imperative to speed, to scale, to impact, and also all of them are clear. We need to have African solutions. Solutions must come from the continent. And also we have heard it's not only a matter of legacy, we need to fix things to be sure that we are having impact, that we are going on the middle miles. Education is very important, having things built together, and really thank you for all your insight. I think all of our panelists deserve a great round of applause, and the discussion will continue. So don't forget, for those who want the report, the QR code is just there. So thank you very much, all of you. We'll just take a photo of the panel and then move to the next sessions.